Nigel.
Well, that's right, Vinny. Let's get straight to Sacchitanand Uttekar of Tradebulls for a technical check on the market. Sachi, yesterday we thought we were off to the races, and then from the top, the markets pulled back 200 points. Is this trend still up, first of all? And would you be looking to buy and play on the upside, or do you think markets are showing signs of fatigue? So you'd rather stay away or short the index?
Good morning, Nigel. Nigel, I think the sector rotation has been very healthy. From a trend perspective, what we have been observing is that 25,400 has been acting as a very strong demand zone. Last week we saw an engulfing bullish formation reiterating this particular support. And even yesterday when we faced some selling pressure, the ultimate conclusion was a formation of a homing pigeon candlestick formation, which is a very rare candlestick formation. And all these patterns are coinciding and indicating that there is a brief pause. But if you look at the overall structure, 25,400, 450 is a very strong support, and this particular support is within the ongoing or the progressing uptrend. So we are expecting that eventually markets will cross that hurdle of 25,650, where its 50-day exponential moving average is also placed. Overall structure has been healthy. The sector rotation is good. So I think the consolidation is something wherein opportunities are still on the bullish side. One can keep a stop loss at 25,400 on closing basis and expect the markets to scale above the 25,650, and we may see eventual momentum towards 26,000 during this particular series.
Sacchitanand, individual names that you're looking at today?
Good morning, Vinny. Vinny, I think Nifty Pharma is the flavor of the day, and if you look at all the major components, they are already in a very strong trending mode. But there are a couple of pockets, a couple of stocks which were in a severe downtrend, and they have seen some very significant built-up and reversals. The first stock that we are recommending is Mankind Pharma. Disclosure would be that we have recommended this particular stock to our clients as well. Now, if you look at the overall structure for the last 23 weeks, the stock was in a low top, low bottom sequence. Since yesterday, the rollovers have been very significant. We have already seen a short covering in yesterday's session, followed by today's long built up. If you look at the overall structure, we are expecting that this particular momentum may stretch towards 2320 immediately, but a positional target is placed at around 2452. So we are recommending building fresh long positions, keeping a stop loss at 22.05 on closing basis. The other stock which has been very significant despite of the market volatility in the last 4 weeks is BEL. Now, if you look at the overall weekly performance, the stock has been holding itself above its 5-week exponential moving average. And if you look at the daily charts, it looks like a classic contracting triangle formation. Now, if you look at the immediate options data, the 440 put writers have been very adamant. What we are observed on the 30-minute scale is an inverse head and shoulder breakout right now, which is indicating that we may see a concluding move towards 480 soon. Hence, we are recommending buying BEL futures, keeping a stop loss at 440 on closing basis. A trading target is placed at around 462, followed by the positional target at around 480.
Okay, all right. Thanks a lot for that, Sachi. Well, time to shift focus to our special